Let's review our trades for today. Today is Tuesday, August 8th of 2023. Now, as you see here, we did quite a few trades in our main option trading account. Now, 3 of these were dealing with our XLU cash secure put option that got assigned last night. So overnight, we were assigned 200 shares of XLU at $67 per share. And I'm gonna go ahead and jump down here. Later in the day, we ended up closing those shares out. We did not turn them into a covered call. I decided that I preferred to just be back into a cash secure put option position. So we sold those shares. Notice we sold them for loss. We had to buy them at $67. Now we did get some premium from the put option we sold, but we'll kind of just say that's in our pocket. Let's kind of focus on our trade here. So we bought the shares at 67, sold them at $63.70 per share. So we see a loss there of around $3 and some cents for the per 200 shares. But then what we did to get that money back is we did increase the number of contracts. And now we've sold 500 shares worth, or 5 contracts of the September $64 put option. See right here, September 64 put option. We sold 5 of those. Then we just bought the 55 just for some really cheap insurance. It only cost us 7 cents per share. So when you figure the loss that we took for buying the shares at 67, selling at $63.70, and then the commission, the premium we collected here, we ended up with a wash, and we were able to roll our strike price down to $64. So here's what's going on with XLU. It should have found support based on this previous area somewhere in the vicinity where it's at now. Initially, we were thinking it was going to hold support around this green 50 moving average, because that 50 moving average does tend to serve as support, but it was also right here around this area that served as resistance for it multiple times, even going back here into March, but that failed, and it happens. As a trader, you're just not going to have all the trades go your way. And that really is one of the bigger parts of being a successful trader, is just having a game plan in place to know what you're going to do when your positions go against you, or when the whole market goes against you. Let's say we have a huge crash. How are you going to deal with your positions? So nothing new here. We're just adjusting, and we had our game plan. We had several possibilities to adjust this, and this is the one I decided to go with. So we do still have one more August $64 strike price cash secure put option that we'll look to roll out or roll down or do something with before it expires next week on Friday. But for now, we're back at an area now where should serve as support again. Of course, XLU could just keep going, but this area around $64 served as support here in the end of June, and going back to the beginning of June, and going to March, and late March and early March. So an area that should serve as support for it, and we'll just kind of see what happens, and we'll trade accordingly. Next one is AMT. So pretty much today was about adjusting positions that had gone against us. We're trying to go ahead and adjust some positions so we're not just overloaded with positions next week. And we always want to collect credits. And as you see here, we pretty much got a credit on every single trade. Every single trade we did today, we got a credit for rolling it, closing out, swapping out, or in some way. I like to get paid. It matches my personality, my mindset, and it's how I like to trade. So that's what we're able to do. So today we are in a covered call and cash secure put option position in AMT. And simply what we did is we bought the August 18th 190 cash secure put option to close it out. We rolled it down by $5 and rolled it out to September. So it went from 190 to 185. It went out from August to September. Then with the covered call, did kind of the same thing. We bought to close the August 18th 195 covered call, sold to open the 190 September covered call, and got $1.80 per share for that. So we'll put our charts up here. So here we see AMT has kind of been in a nice little range here. The highs have been around this $200 mark, the lows all the way down here around 178, 180 right in there. And so we were at the 190, 195. So we just kind of flopped that down. We're still having a spread here of $5 between our covered call at 190 and our cash secure put option at 185. So we have a little room in here. They both could technically expire worthless if they're in between 185 and 190. But I wanted to get that cash secure put option especially rolled down in case it continues lower. So happy to get that done, and now we'll see if this support level holds right here around this $180 area. Next trade is NEP. This is one that's really gone against us pretty hard. And so in addition to the covered call I rolled down yesterday, I decided to go ahead and sell some bearish call credit spreads that expire next month. And we're able to get $1.50 per share. So if this works out for us, that really goes a long way towards helping to repair this position. It doesn't fix it all the way, but that kind of money, $1.51 is nice. It's a nice way to reduce our overall out-of-pocket costs. And the reason is, notice this candle today. Higher volume now. We could say some of that high volume was where the sellers sold it down and buyers bought it back up. That could definitely be some of that volume. But still seeing weakness. In this area right here at the $50 mark, we rolled our covered call position down to yesterday, that $50 area. That should serve as resistance, at least temporarily for it, which would give us a chance to either. So what would happen if this $50 short call option was challenged? We've now sold 8 of the $50 strike price cover calls or call options. 4 expire in September and 4 I believe will expire in October. So what do we do if it comes back up and challenges that $50 September strike price call option? Well, we have a couple of choices. We can of course roll it up as we roll out, or we could even buy some shares to turn that piece into a covered call. So right now we're in a covered call with the October $50 covered call options, and we've also done a bearish call credit spread with the September $50 calls. And so we'll look out, see how the next month plays out, and adjust it accordingly. Now we'll skip XLU. We've already talked about that, and we'll jump down here to our HON trades. So had 2 cash secured put options that expire in August, and Honeywell, we had the 192.5 cash secured put and the 195. So unfortunately, I had to go all the way out to December to get it down for any kind of a credit, but we're able to basically roll our 195 cash secured put option down to 190. And then we rolled our 192.5 cash secured put option down to 185. So able to get them down pretty good. Let's just take a look at this chart. This is a trade. This is one of the few trades we have that just went against us almost from the get-go. So we've been fighting this thing. We're expecting it to find support along this upward sloping trend line here. And it just never did. One day it found support there. And ever since then, just drop, drop, drop. So now today, on fairly high volume, which is a nice long leg here, a doji here. So did it find support? Well, I don't know. I feel like it's going to come down all the way down to here now, to this 185 area, and test that for support. So we were able to get our strike prices rolled way down into an area that should serve as support for it. And notice over here on the weekly chart that the volume was lower last week than the week before. So that's showing that the momentum was declining last week. Now it's only Tuesday, so we're only 2/5 the way through this week. So we don't know where volume will be at or what the candlestick will look like by the end of the week. But so far it's looking fairly interesting. But again, tremendous weakness on Honeywell. And we just improved our position and kind of kicked the problem down the road just to give Honeywell a chance to turn around and go back up, or we'll just have to adjust it some other way if these cash secured put options don't hold for us through December. But now we have multiple months to give Honeywell a chance to turn around. Finally, our MDT position. So what we did is we rolled this MDT August 18th $85 cash secured put option. We rolled it out to October, so a couple months, and down by $2.50 to the $82.50 strike price. And again, collected 48 cents per share for rolling that cash secured put option. So here we have our charts at MDT. Another one that kind of failed its support. We see it had been a nice little, look over here on the weekly chart, see it had been a nice little uptrend going all the way back to, this was March, so beginning to middle of March. It's been a nice little uptrend, making higher highs, higher lows, and it still hasn't made a lower low yet, so this actually isn't broken yet, because this low right here would be the one it'd have to breach, which would be around $81.02, and it hasn't done that yet. Notice the low so far this week is at $81.55. So we're still in an upward trend. The question is, where will it settle? You know, we'll end up below that, which will reverse this upward trend, or where will it be at? But it breached that upward sloping trend line. It did that this week. So because of that, I decided to go ahead, and just in case it were to continue to decline, I decided to go ahead and roll that strike price down as we rolled it out. It is pretty close to an area right here that should serve as support for it, going back to May 26th. This low around $81.02, that should serve as support for it. And it does appear that's kind of what happened today. So the question is, will it hold? So we need a few more days here to see if it holds. Pretty high volume, looks encouraging. I mean, it looks like buyers came in and bought it up. So we'll see if that was indeed the case, and we'll adjust accordingly if we need to. Otherwise, we'll be in this company until, looks like, October, unless we can close it out early. So we'll look for some new trades tomorrow, and also have a good number of positions that have gone our way, just waiting on time value to dissipate out of them. With volatility spiking a little bit, those premiums go up. So now we'll have to give a little more time for volatility to come back down. We see over the past 5 days, it did not a huge spike, but it went from where it was around 19, and today it got as high as 20.86. So now we'll see if it comes down, if it's going to continue higher, and we'll look to close those positions out that expire next Friday. So that's all for today. I hope you have a great evening.